I want to talk about interest rates. Obviously, interest rates are dominating the headlines right now with this 0.25% increase. We have another Friday pod that we do every week, and our partner in that has been telling us that, interest rates are going to increase. I've been saying, no, they're not. They're going to stabilize or they're going to come down. And here we are with a 0.25 raise. How do you see that affecting the market, if any effect?
Okay, well, interest rates just change behavior. It does, and it dampens down demand, but it doesn't stop demand. It doesn't change it anywhere near as much as many of the talking heads say. It might drop demand, say a 0.5% rise, which I think there's another 0.25% coming. Whether or not it's May, August, I suspect it'll be after the proper quarterly figure comes out next, which will be then a May change, and I suspect it'll go up again. So let's call it a 0.5% rise for the current tightening cycle. That would reduce demand for property about 8, maybe 10%. That's generic across Australia. Of course, its impact on, say, the Gold Coast or on Albany, Wodonga, or in definitely places like Perth would be less than that because there's momentum in local markets and supply type. There's a whole range of things we'll get into that affect those the real markets in Australia, not just the overall market. So that will reduce the demand, but that will not stop price growth, I don't believe. It will not necessarily stop markets in its tracks, although I read that a downturn is coming. No market really is in a position in the downturn phase of the cycle at the moment. It might slow those cycles down. It may see less price growth than would have happened without it. And that's the aim of rising interest rates, is to reduce inflation, and price growth of housing is really an inflationary thing in terms of it's going up in value, so that causes some inflation.